Imagine a time when the world's most powerful empire was a debtor, suffocating under a mountain of debt from a long and costly war. The year is 1720, and in the bustling coffee houses and grand halls of London, a single company promised to not only erase that debt, but to mint a new class of millionaires overnight. This is the true story of the South Sea Bubble, a perfect storm of political ambition, financial deception, and human greed that serves as a timeless cautionary tale. Welcome to Economic Epochs. Today we're not just telling the story of a stock market crash, we're exploring a moment that fundamentally changed the relationship between government and finance. Our story begins in the heart of London, in the early 18th century. Following the War of the Spanish Succession, the British government found itself in a precarious position. The national debt had ballooned to an unprecedented £50 million, a staggering sum at the time. To put that in perspective, the entire annual revenue of the government was barely £3.5 million. The debt was held by various creditors, including wealthy merchants and bankers, and the government struggled to make interest payments. Into this vacuum of desperation stepped the South Sea Company. Formed in 1711, its official purpose was to consolidate a portion of this national debt. In exchange, it was given a monopoly on trade with South America and the islands of the South Seas. The name was brilliant marketing. It painted a picture of exotic treasures, endless gold, and a new era of prosperity, all derived from a continent that was in reality almost entirely under the iron grip of Spain. The trade monopoly was, for all practical purposes, a fiction, but the name, the promise, was enough. For a decade, the company existed quietly, a respectable but unremarkable entity. But the stage was set for a dramatic change. The year is 1720. The company, in a move masterminded by its directors and their political allies in Parliament, proposed an audacious scheme. It offered to take on almost the entire national debt in exchange for a monopoly over the conversion of all annuities and government bonds into its own stock. The government, keen to escape its debt burden, passed the South Sea Act with very little opposition. The deal was done. Suddenly, the South Sea Company wasn't just a trading company, it was the most important financial entity in the entire kingdom. The perception was that if you owned stock in the South Sea Company, you were not just an investor, but a partner in the future of the nation itself. The psychological effect was immediate and overwhelming. The stock, which had been trading around £120 at the start of the year, began to climb. It hit £300 in March, then £550 in May, and by July it was over £900. It briefly touched an all-time high of £1,050 in early August. The frenzy was all-consuming. Everyone wanted in, from servants to dukes, from merchants to clergymen. People sold their houses, mortgaged their lands, and cashed in their life savings to buy South Sea stock. And where there's one bubble, others follow. The success of the South Sea Company spawned a wave of speculative bubble companies with ridiculous and even satirical names. There was the Puckles Machine Gun Company, the Company for a Grand Universal Fishery, and perhaps most famously, the Company for carrying on an undertaking of great advantage, but no one to know what it is. The public, driven by pure speculative madness, bought shares in all of them. These bubble companies were so numerous and so wild that Parliament, alarmed by the chaos, passed a new law to shut them down. And this is where the South Sea Company made its fatal mistake. As it began to prosecute these small, fraudulent companies, it unwittingly drew attention to the fraudulent nature of its own enterprise. Investors who were in the know, the directors and their political allies, began to sell their shares quietly. A whisper of doubt turned into a chorus of fear. The price started to fall. By the end of September, the stock had plummeted from over £800 to just over £150. The crash was violent and devastating. The panic was immediate and catastrophic. People who had been millionaires on paper just weeks before were now penniless. Fortunes vanished in a puff of smoke. The social fabric was torn apart as rich and poor alike were ruined. The dream of South Sea riches turned into a nightmare of debt, despair, and widespread public outrage. The aftermath was brutal. Parliament launched an investigation, uncovering fraud, bribery, and corruption that reached the highest levels of government. The directors of the South Sea Company were arrested, and their assets were seized to pay off creditors. The government, chastened by the chaos, passed the famous Bubble Act of 1720, which restricted the formation of joint stock companies without a royal charter. This act would shape British corporate law for over a century. The South Sea Bubble didn't just cause a financial crash, it created a profound public distrust of financial markets that took years to recover from. It stands as a powerful reminder that while ambition and innovation can drive markets, unbridled speculation and the human desire for a quick profit can lead to their dramatic downfall.